Manish Nikam. Subject: Corporate Valuation, Merger and Acquisition. Roll number: MB21093. Topic: Working Capital. Meaning of working capital. In very simple terms, working capital means the amount required to day-to-day business smoothly. It is excess of current asset over current liability. From other point of view, we can say that working capital is a part of current asset, that is raw material, which is required to run the fixed asset, that is machine, profitably. Working capital is equal to current asset minus current liability. Current asset. Current assets are those assets which can be converted into cash within 1 year or less than 1 year. In current asset, we include cash, bank data, bill receivable, prepaid expenses, outstanding income. Current liabilities. Current liabilities are those liabilities which can be repaid to respective parties within 1 year or less than 1 year at their maturity. In current liability, we include creditors, outstanding bills, bank overdraft, bills payable, and short-term loans, outstanding expenses, advances, income, etc. Working capital, value and time. Value, gross working capital, current assets, cash, 1 year. Net working capital, differences of current asset and current liability, positive, negative, able to pay short-term loan, unable to pay short-term loan. Time, permanent working capital, temporary working capital, permanent working capital, minimum investment throughout the year, current assets, minimum level of activities, temporary working capital, investment above permanent working capital, variable working capital, fluctuating, that is seasonal, festival, etc. On the basis of value, it have two types of working: gross working capital and net working capital. Gross working capital refers to the investment in all current asset. It is also known as gross current asset, the sum of all the company's current asset that are convertible to a cash within a year or less. Net working capital, it is the difference between current asset and current liability. It is the amount invested by the promoters on a current asset of the organization. On the basis of time, it has two types: working capital. Permanent working capital, minimum amount of investment in current asset required at all point of time, remains in the business in one form or another, grows with the size of the business, financed by long-term funds. Temporary working capital, variable working capital required by business over and above permanent working capital, additional current asset required at a different point of time. Example: extra inventory should be maintained during peak sales period like festival season, etc. Will decrease in depression period or off season. Finance from short term loans. It is a issue of today's business. Yes, it is because every business landscape has become competitive, complex, ever changing. So building a profitable business and ensuring its success in future is increasingly difficult. Also, it is also facing problems like shortage of cash, heavy bad debts, cash block in inventories, spoiling reputation by late payment to creditor because of shortage of cash itself. This all arises due to inefficient working capital management, so it has become a significant issue in today's business and how to manage it to optimize profit and ensure success. Analysis of working capital inadequate, risk insolvency, large ideal funds, cost, interest payment, adequate short-term and long-term survival at different position. The standard growth, the standard favorable ratio of current asset in relation to current liabilities 2 is to 1. This means a company has total liabilities of 1 rupee, and to pay that liability it has to available a cash or say liquidity of 2 rupees, or say it has a sufficient current asset to meet the current level. Note, this ratio may vary as per the nature of the business. Importance of working capital management. Working capital management is required to use fixed asset probability. For example, machine cannot be used productively without raw material, etc. Funds are required for day-to-day operation and transaction. These are provided by cash and cash equivalent forming part of current asset. Adequate working capital determine the short-term solvency of the firm. Increase in activity levels and sales should be backed by suitable investment in the working capital to expand business. Adequate working capital enables a firm to face business crisis in emergency such as depression. Working capital, current asset management, current liability management, current asset management, cash management, debtors management, inventory management, current liability management, creditors management, other short-term liabilities and management. Steps of working capital management. The technique should be applied in different items of working capital like cash, debtors, and creditors. Cash management, most important aspects of working capital. Cash planning, the pattern of cash flow and outflow should be properly predicted in advance by preparing cash budget. Managing the cash flow, the cash inflow should be accelerated, speed up, while as far as possible the cash outflow should be decelerated. Optimum cash level, the optimum cash level of balance should be determined by balancing the twin objectives of liquidity and profitability. Investing surplus cash should be properly invested to earn profit. The firm should determine the timing and quantity of investment of surplus cash. Debtors management, collecting debts on time, settling credit limit that is 10, 50, 30 or so on, providing discounting facilities for early payment, enforcing a clear credit policy, considering debtor finance. Inventory management, classification and codification of inventory, maintenance of inventory record, control of the cycle flow of material, control of tools, storeroom management. Creditors management, find reliable and competitively prices suppliers, negotiate clear written agreement from the outset, communicate with the supplier, improve system for repaying for paying suppliers, keep good records. Other short-term loans management, payment of outstanding salaries, wages, expenses, etc., payment of outstanding duties and taxes, outstanding interest, etc., payment of short-term loans. Conclusion. From all the above discussion, we can conclude that working capital management is one of the trending contemporary issue which the business enterprise and organizations are facing nowadays. So they should apply the working capital management techniques and prepare smart plans for procurement of working capital for the growth, profitability, and ultimate success of their business. Thank you.